why we are doing bank reconciliation. The reason behind that is that in our ledger, in our records, ledger means our records. In our records, we have bank balance. Bank is usually an asset. For example, we say that we have $100,000 in our bank account. This we are saying that, but this is my account, no? This is my ledger, right? This is my books, which are reflecting that I do have money in the bank, which is equals to $100,000. But there is a problem. The problem is the bank. Bank is a separate legal entity. Bank records, bank records, we used to say bank statement. Bank is telling us our balance in form of bank statement. Bank is saying, okay, mister, as per our records, you have only $80,000. Okay, what our records are stating? Our records are saying that we do have money in the bank, which is only $100,000. But when we are checking our bank statement, it's showing that we do have only $80,000. So both amounts are not equal, both amounts are imbalanced, and this imbalancing we are worried with. What happens? We are saying we have $100,000. Bank is saying you have only $80,000. Where is my $20,000? I am going to worry. I am going to be panic. This is a bad situation. So in order to find out why our records and why bank records are different, in order to sort out or in order to reconcile that, we are going to produce an statement which is called bank reconciliation statement. Bank reconciliation statement is a need of every company. Every month, the companies are doing bank recon to find out the difference between their ledgers and their bank statement. These are our differences which have different types, which we are going to learn in this class. First of all, till now, we identify why bank recon, why we are producing bank reconciliation statement. So till here, we are just identified the need of bank reconciliation statement. Now, moving forward, we are going to discuss in detail that how this will affect our working. Later, let's say we are ABC Limited and our ledger is showing bank balance. Usually, bank balance is an asset. My money in the bank, if I put money in the bank, which is, let's suppose, $100,000, it's my asset. If I do have money in the bank, it's my asset. Simple and easy. An asset is always on which side? Debit side or credit side? Asset is always on debit side. But what about bank? Bank, on the other hand, bank have my account, any ABC Limited account, which do have some number, some account number. For bank, who am I? For bank, who am I? I kept my money in the bank, it's my asset. But is it bank's money? No. Bank is just keeping ABC Limited's money, or bank is just keeping Mr. ABC's money. If I remove limited, it will be Mr. If I keep limited, it's a company. Either case, no problem. So, Mr. ABC or ABC Limited. ABC Limited is saying, I do have money. So it's an asset for ABC Limited. But what about bank? Is this money belongs to the bank, or bank is just keeping it secure? Bank is just keeping it secure. It's not the money of the bank. Am I right? So for the bank, this money, let's suppose bank is saying, okay, 100,000 we do have, okay, same, no problem. For the bank, this money is a liability. Bank will consider your money as a liability. Why? Because on your demand, bank have to return your money. Yani, if it is an asset for you, if bank balance is an asset for you, on the contrary, on the other hand, it's a liability for bank to repay your money whenever you demand. This is a very important concept. My money is my asset. My bank balance is my asset. But for the bank, it's not the asset of the bank. It's a liability for the bank, and bank have to return my money if I required from them. If both amounts are equal, there is no need of bank reconciliation. But if both amounts are different, then we are going to produce bank reconciliation statement. Just now we discussed my assets. My asset is a liability on the other hand for the bank. Any questions till now? Okay. Situation change. Let's say Mr. X, he have bank overdraft. We learned this earlier that bank overdraft is an asset or a liability. Bank overdraft is always a liability. My liability means I borrowed from the bank. I have negative bank balance. Yani I took loan, short-term loan from the bank, which is my liability. If it is my liability, on the other hand, for the bank, myself here, Mr. X, account number so and so, if bank provides me an overdraft facility, same amount, just assume. So for the bank, it will be an asset. Oh, why? Because normally if you have money in the bank, it's yours asset and bank's liability. Because yours money, bank have to repay you. But here is opposite. You took loan from the bank, short-term loan from the bank, which is bank overdraft. You took money from the bank, so it's yours liability, is the account holder's liability. But for the bank, it's an asset, because bank will need this money from you. Once you will finish the term, you have to repay this money. So bank overdraft is a liability for a person, but for the bank, it's an asset. And we know that liability has a balance on credit side and asset do have balance on debit side. This is the concept of balance. Some people say is bank is doing inverse accounting or reverse accounting. No, bank is not doing a inverse accounting. Bank is doing correct accounting. But for bank, we are a liability. If we have money in the bank, For bank, we are liability. That's why bank is keeping us on credit side. But if we are taking loan from the bank, for bank is an asset, and asset is always on debit side. So this is a very basic concept. So the summary is, if we have money in the bank, it's debit in our account, and if in debit in our account, it will reflect credit in bank statement. But if it's an overdraft, it will be negative in our account, means credit in our account, it's going to be debited on the bank statement. So that's the simple theory of balance, where the balance is going to reflect. Now, why we are producing bank reconciliation? Because our ledger and the bank statement showing different balances. If my ledger is showing 100,000 and bank statement is showing any other amount, higher or lower, no problem, but any other amount, there is a need to produce bank reconciliation. Now I'm going to tell some line items which are going to appear when we are going to produce bank reconciliation. So first of all, we are going to learn line items. The first item is bank charges. If bank deducts charges from your account without informing you, so definitely they are deducted from the bank statement but not showing in your ledger. So once you comes to know that bank deduct some charges, you will less, you are going to deduct them from your ledger. So the first adjustment of bank reconciliation is bank charges. And if bank deducts charges from your account, those charges you are going to deduct from your ledger, from your cash book. Got my point? Next thing is standing order. Standing order means if you passed instruction to the bank to deduct fixed amount of money for a fixed period of time, for example, rent payments. Every month is difficult to remember fixed payments, so you can write a letter to the bank that, hey bank, every month on this date, deduct this much money from my account and deposit into the other person account or landlord account or any other person account, fixed amount, fixed time period, and the length is 1 year or 10 years or 2 years, something like that. If you are passing any information to the bank will bound for that, and bank is going to deduct this amount every month on the specific date. But you need to record that in your ledger once you will going to get the statement, because bank is doing his job on time. Your ledger need to be updated once you will get the bank statement. So standing order is going to be deducted from ledger. Standing order, fixed amount, fixed time period. Then we have something called direct debit. Direct debit is we are passing instruction to the bank that deduct from our account and put the money to other person or other company's account on a specific date, but amount is not fixed. Whatever the bill amount will come, just take it from our account and put it into electricity company's account. The bill, electricity bill, telephone bill cannot be fixed amount. Like standing order, feature of standing order is amount must be fixed. But direct debit means bank is deducting money from your account, but it's not a fixed amount. It's variable. It's varies. It's different amounts. So bank is deducting when you will deduct once you will get the bank statement. So this amount has to be deducted from the ledger. So these are three adjustments which we just discussed, all need to be adjusted from ledger. Now sometimes interest, dividend, incomes deposited. And without your knowledge, some companies or bank is going to put money in your account. So how you will comes to know that bank credited your account? Means bank credit means bank is increasing his liability, means your asset is increasing. Bank credited yani bank increase the balance in your account because of interest, because you kept money for long from, because of some dividend which you got from some other company share. So this amount you will only comes to know when you will get the bank statement. The number one, number two, and number three were payments. Bank is informing you that I deduct this one and two and three. But here in number four, bank is informing that you got income. Income means I am getting money. If I am getting money and if I got information through bank statement that I got some money, what should I do? I should add it or I should deduct it?
You don't add it.
I should add it in my ledger accounts. So these four adjustments which we just discussed are the normal adjustments of cash book or ledger. Then we have some other adjustments which are called time difference. Time difference means because of delay or because of some issues, the payment got deducted or added in the bank late. So we are just going to adjust them in order to look that everything is fine or no. These timing difference are very easy, not much difficult. We need to understand them first. The very first time difference is unpresented checks. Tell me one thing, that if we are giving checks to supplier, means we are paying them, right or wrong? Unpresented checks means we are paying to supplier. What happens? We give check. Whenever we are giving check, we are making an entry. We are recording an entry. What is the entry? The entry is bank credit, payable debit. Whenever we are paying, we are making an accounting entry, bank credit. And our ledger accounts, we are deducting the money when we are issuing the check. Correct me if I am wrong.
Yeah.
Whenever we are paying money to customer, we are deducting it from our ledger account by making an accounting entry. But the problem is it mandatory? Is it rule that the customer will go today by itself to the bank and take out the money? No, sir. It's not the rule. It's choice of the supplier. When he will be free, he will only go there and he will take out the money. Simple and easy. That there is a time lag, there is a time difference. That supplier will go to collect the money as per his ease, as per his wish, as per his choice. He will not go now. He might go after 2 days. He might go after 4 days. He might go after 3 weeks. He might go after 4 months. The time allowed is 6 months. Check is going to expire after 6 months. So anyone who have a check he has 6 months to present it and take the money. So if I pays a check but my supplier didn't withdraw it till now, I already recorded it in ledger, but in bank statement this type of check is not going to reflect because this guy not yet goes to the bank to withdraw the money. So what should I do in order to adjust? I will deduct this amount from the bank statement to check that the reconciliation is happening correctly or no. That it's not taken today, but tomorrow or day after tomorrow or till maximum 6 months period, this guy will definitely come and he will take out the money. So let's deduct it today and see that bank reconciliation or the balance between ledger and the bank is matching or no. That is the concept of unpresented check, which we are issuing to supplier, but supplier not yet withdrawn. So we will deduct them from bank statement to check is the ledger and bank is tying or adjusting or no. Then we have uncleared checks. Uncleared checks are checks which we got from customers, which we are getting from customers. But because of some laziness, we are not putting in the bank. But once we are getting check, definitely we are recording it in our ledger by doing bank debit receivable credit. So no need to make any adjustment in ledger. Tell me, customer check which you got is going to increase your bank balance or is going to decrease your bank balance? Increase. So contrary or opposite to unpresented check, unclear checks which I got from the customer and not yet showing in the bank statement, I will just add in order to check that ledger and bank statement are balancing or no, to just do the bank recon. And come in order to reconcile the ledger and the bank statement, the checks which we paid but not yet showing in the bank statement, we are deducting. And the checks we got, we deposited in the bank but not yet reflecting in bank statement, the balance not yet came in the bank statement, which we are going to add. The last thing is a tricky thing. This is called dishonored honored check. When you are getting a check from your customer, you are going to debit bank and receivable credit, right or wrong? And if I says received check from customer, what we are doing? Bank debit, let's say is 10,000, receivable credit. But if bank informed you that this check is dishonored. Dishonored means the sign on the check is wrong, the date is wrong, check is filled wrongly, or the person who gave you the check, he is doing fraud with you as he don't have money in the bank. So if this is the case, if this is the case, this is called dishonored. If we comes to know that a check is dishonored, what we need to do? This entry we need to reverse. Why? Because what we were expecting that our bank balance is going to increase and our receivable right to receive money is going to finish. But now, as bank is telling us that there is no money in this account, this money you are not going to get it. So what you need to do? You have to reverse that entry. Reversal of entry will be bank. I am going to credit the bank that I am not getting the money, and I am going to increase my right to receive. That I am going to call him that, hey brother, why you did this? Give me my money back. which the check you gave me is dishonored. I didn't get money in the bank, so I'm crediting the bank account again and I'm increasing the receivable. You have to pay my money back, otherwise I'm going to complain about you and you are going to face case in the court of law, because dishonor check is illegal. If you are giving check to someone, your check have to be honored. Your check must be clear. Fake issuance of check without any, if you don't have money and you are issuing check, is illegal, unethical act. So what you did, you are crediting the bank because of dishonored, and credit means you are reducing your bank account. So whenever you will see the dishonored check in your paper, you are going to deduct the amount from the ledger. So what we see is that five adjustments from ledger and two adjustments from bank statement. The adjustment which we are going to do from bank statement are known as temporary differences. Temporary differences means there is no entry required. This amounts will auto adjusted later or sooner. The last thing is correction of error. If you are making an error or bank might make an error, is possible. If you or bank anyone make an error, it will be adjusted from your side or from bank side. Any error, if you are doing making the error, if the error is done by you, it is going to be added or deducted from ledger account. And if the error is done by the bank, it's going to be adjusted from bank column. So it depends. When we are going to look the questions, we are going to do that. So this is a basic overview of bank reconciliation. Look at it, see any confusion if you have, then we will start some practical questions from the past papers, and then this topic will be completed. Now we are going to start with some past papers. These are paper 1, okay, MCQ. Now very carefully look this one, because in this question we are going to finalize the format and we will continue. There are two columns in bank reconciliation statement. The first column is called cash book, any ledger, and second column is called bank statement. Cash book means ledger, yani R records, yani R records, and bank statement means bank records. Now, reading the question carefully. Always read the requirement first. What is the bank balance shows in the J's statement of financial position. Ledger is going to reflect in SFP. SFP is the balance sheet. So what he asked, he's asking the balance in statement of financial position, means he's asking you the final balance of ledger. First of all, understanding of question is very important. What he is asking, he is asking the final balance of the cash book, which is also known as the balance in ledger or balance going to be appear in balance sheet. The name of balance sheet, as we know, is statement of financial position. On July, bank column in cash book shows 312 in the bank. Yani this is the balance. So always remember, bank reconciliation will start from opening balances. Balance opening means BD. What is there? 312 in the bank. In the bank, our records, our cash book is showing that we have money in the bank. Money in the bank means positive, and we do have money in the bank. On the same date, bank statement is showing debit balance. Bank statement is showing debit balance. What does this mean? We go up, bank statement, debit balance. Bank statement debit balance means overdraft. Yani we are saying that we have money, 312. Bank is saying, sorry, my friend, you don't have money. Bank debit balance, yani bank statement, BS means bank statement, debit balance means negative balance, credit means positive balance. Bank balance is negative, yani bank statement is showing debit balance, yani negative balance. So this is a problem. What we are thinking that we do have money in the bank, which is $312. But when we took the bank statement, we got surprised and we found out that as per the bank records, we don't have any money. Okay, so let's handle the reconciliations. First one is it was found that bank charges 47 not recorded in the cash book. Let's see what we used to do with bank charges. We just learned bank charges need to be deducted from which column? From the ledger, from the cash book. So let's do that. We are going to deduct bank charges from the cash book, from the ledger, which are only 47. Very good. Any questions till now? This brackets means minus. This brackets means minus. So either we make brackets or we write like minus signature. But in accounting, instead of writing minus sign, we used to make brackets when we are making reconciliation statements. And what we did, that bank charges need to be deducted from the ledger column. So we deducted the bank charges, yani brackets means deduction minus bank charges from the ledger. Till here, any questions please? Then the question continues. A check, a check 318 from customer had not been credited by the bank. Customer check going up. Customer check is which number? Number 1, 2, 3, 4, 5, 6, 7, 8. We have 8 adjustments. Customer check is adjustment number what? So we are looking from one. Bank charges standing. No, 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 no. Number 5, unpresented check. But unpresented relates or belongs to supplier. We need customer. Here the customer is. Number 6, uncleared checks. Customer checks are known as uncleared. Yani till now these amounts are not reflecting, not credited in our bank statement, but sooner or later they will be. So what is the adjustment of uncleared check? We learned that uncleared check need to be added. Uncleared check need to be added in bank statement column. So let's do that. Uncleared check need to be added in bank statement column. So uncleared check need to be added in bank statement column. Colors. All entries being done. Now all entries being done. So we will do some maths. 312 minus 47. I am getting 265. Bank bracket yani minus 53 plus 318. I am getting 265. Yani after doing the statement, after completing the bank reconciliation, I got balance which is adjusted balance. Adjusted balance means both are now equal. Yani our balance which was 312, bank balance which was minus 53 are now being tied, are now being okay, which is showing that what we did is correct, our statement is correct, our balance was correct. That because of two differences, there was imbalancement appearing. What they are asking? They are asking you the balance in balance sheet, which is this one. Is it coming positive or negative? It's coming positive. Positive. Ledger. Ledger positive. If my ledger is positive, what does this mean? We just discussed. If we have money in ledger, positive balance in ledger, it's always a debit. So ledger, ledger or cash book, same thing. SFP, same thing. Debit means positive, credit means negative. We just discussed that one earlier. So this 265 is coming positive. Positive in ledger means it's a debit balance. So the option of this question or the answer of this particular question is option A, that 265 debit. Sir, it's not written debit, it's written asset. So my friend, cash book debit, debit is always what? Asset. Look here, we just discussed this. If we have money in the bank, it's an asset. An asset is always on debit side for us. If we don't have money in the bank, it's an overdraft. It's a liability, credit for us. If it's a credit for us, it will be debit for bank. And if it is a debit for us, any asset for us, it's going to be a liability, a credit for the bank. So that's a simple what you call the coverage of the whole chapter of bank reconciliation. This bank reconciliation is a very keen part of all the accounting exams. Either it's IGCSE, O levels, AS, A levels. If you are going to study for ACCA or CA, Chartered Accountancy, bank reconciliation is going to be part of that course. It's that much important. So these are the 8 adjustments you must memorize by your heart. And this one question we did, a lot of past paper question we do have, which we are going to study in our next class. Any questions, please ask, and then we will close the class, end the class.